What's up, everybody? Dave Bartosiak here, and I've got another chart of the day for you. Today, we're talking about AeroVironment, ticker AVAV. So this is a drone company, and not your typical like commercial drones. You're not going to be flying these around the neighborhood. You're going to be flying these into military area, to military drone companies. You're going to be flying into combat areas and shooting missiles and all types of stuff, doing recon, all the fancy stuff that unarmed or unmanned aircraft do nowadays. Now, why are we talking about it? Well, a couple of things. First, look at this trend. Here's a 200-day moving average, and you can see something shifted really positively for the company. November 2022. That's when you kind of break out from this sideways action, a little bit of consolidation, and really get some momentum. Now, there's been some huge contracts. So they have a basically undefinite amount, undefinite period of time, but a cap of nearly $1 billion contract with the U.S. Army. So recently, and I mean like the other day, which was cause for that gap up, that contract had been on hold. So all the work was on hold. And then the Army went ahead and took the hold off, and that was the big boost here. Okay. Now, I do want to get a little bit more granular here because you have this gap up. You've got earnings, you got some events which have caused these big gaps up. Also have tensions in the Middle East, which have all kind of led to this, right? But here's the concerning part: is you have the spike up over 220, right? Spike up over 220. And then a couple of really nasty days getting down. So that to me is obviously a lot of selling pressure over here. Buyers being completely exhausted, and all these buyers that were scooping it up on this really long, slow slug in the early summer, late spring. There just wasn't anybody left. So when the market came down, it was really searching for where those bids were going to be, and those bids just weren't there because that was really an exhaustion. And you can kind of see that by, the volume really picking up on these down days. And then look at these volumes sort of tail off. Now, I know the broad market, we've got that too. But if you look down here on the volume here, it seems like, this company comes in vogue a little bit there, a little bit there, and then it just kind of fades off, right? Now, that's fine because thin to win is a thing, right? So very low volume can help facilitate, moves in one direction. It takes big volume to reverse, and that's what you saw there. Okay, so why am I bringing up this volume point? Well, look at what's been happening recently. We have some really higher volume days here coming in recently, and these are happening at key points. So you have this wick down. That was, I'm sure we all remember now, the now infamous August 8th, where we had the rapid unwinding of the yen carry trade, which led to a lot of risk off that day. Turns out that was sort of a great bottom to come in and scoop up. Since then, we had another dip under that 50-day moving average, which was also bought again. Like I'm saying, we got these volume spikes on the way down, but we're rounding it out, ticking back up. However, what is there to be concerned about? This series of descending highs, right? Making lower highs along the way. So that's less than ideal, but you also have higher lows. So we got this nice wedge that's coming in here. Eventually what happens is market picks a direction, right? As you coil these things up, you coil up this range, it gets tighter and tighter. It will burst in one direction or the other. So simple way to play this is you can go ahead and draw these trend lines out and wait for a breakout above to go ahead and buy, breakout below to go ahead and short, or just sit on the sidelines. And that's really going to be a clever way that you could play this stock. Now, you do see that it has a tendency to sort of meander around that 50-day moving average, and that's sort of what we're doing now, okay? So as this chops in a tighter and tighter range, expect it's not going to last forever. But remember, gaps do get filled. So the question for this stock in the short term is going to be, does this gap get filled before it goes higher, before we break out of that this wedge? I think it does. because you saw the big spike on the good news yesterday, and then retreating some today. Of course, the whole market's been retreating a little bit today. So not that far off, right? You're talking $8 on a $200 stock is where the top end of this gap is. And to really get in it, I'm going to give you the actual high end of it, 184.29, right? So not even 10% away from where the current price is. So I'd be patient if you're bullish on a company like this. Wait for it to reel back into this gap, and then you can buy just at the bottom end of the gap. Patience pays. And if it starts to break out, then you can buy the breakout. But I would look for some bigger volume to buy on that breakout as well. All right, folks, there you have it for my chart of the day on AeroVironment. Tomorrow, who knows what it's going to be, but I'll have another one for you. So remember to follow the author here on Zacks.com. Subscribe to the YouTube channel. Come back and check us out tomorrow for another chart of the day. For everybody here at Zacks, I'm Dave Bartosiak, and we'll see you then.